Next on, it's time to zero in and talk about a global strategic outlook in terms of the great opportunity that India presents from a business and growth perspective. I take the opportunity to invite on stage Ms. Sangeeta Gupta, Senior Vice President, NASSCOM. She also serves as the Chief Strategy Officer at NASSCOM. Also join me in welcoming Dr. Andrew Staples, Regional Head, APAC, Policy and Insights, Economist Impact. He has come to join us all the way from Singapore. Really appreciate that, sir. Over to you, Ms. Gupta.
Good morning, and thank you so much for joining us here this morning. Really delighted to be at the SME Confluence event, an event created specifically for SMEs by the SME sector. So thank you so much, NASSCOM SME Council, for being the front runner and really helping us build out these enormous platforms. All of us would agree that we are living in a period of phenomenal change. NASSCOM, when it published its report a few weeks back, we called this as a no normal future, a future where the pace of change is going to be exponential. And all of us as organizations and individuals will need to navigate and thrive in this no normal world. But I think sometimes the pace of change you see is also a little bit discerning, right? And the questions we keep getting asked all the time is, are we headed into a recession? Are we already into a recession? When is the recession going to come? Is the current issues of financial banks that we are seeing similar to the 2008 financial crisis? What happens to inflation? What happens to supply chain logistics issues that we've seen? Is COVID back? So I think these are very, very different questions that we keep seeing and hearing from different stakeholders. There are no easy answers. But I think the one way to look at what can be possibly lying ahead is to look at data, trends, understand from the past, and of course see what some of this can mean for the future. I think that's what successful organizations do. They build out the future scenarios and plan for what does it mean if scenario plan A works out, or if scenario plan B works out, or C, or something that's totally unknown. And I think to help all of us navigate this no normal future, I'm delighted to welcome Dr. Andrew Staples, who's joined us here from the Economist Impact Unit. He's really a phenomenal speaker that has been on multiple global platforms talking to different global boards about what does different trends mean and how do you as businesses can think about what lies ahead. I'm not going to read his bio for all of you, but I'd really request the opportunity to go through all the details that Dr. Andrew will share here today. And then we'll have a little bit of time in the end to take some questions, but use this opportunity to absorb all the content that's there and then get inputs on what does this mean for each of us as we move forward. So Andrew, thank you so much for joining us today, and we look forward to your presentation.
Thank you. Thank you very much, Sangeeta, and thank you to the organizers for the invitation. I'm delighted to join you here today. I'm just checking if this mic is on. Not yet? Okay. If I could get this mic switched on. And in the meantime, I'll just speak a little bit more loudly. Thank you again for the invitation and the coverage that you heard there from Sangeeta around the global economy and what's going on around the world at the moment. This is what we do at the Economist Group. I run the part of the business that is the bespoke research and insights unit. And here we go. So maybe I'll speak normally now. Is that okay? Fantastic. All right, let's get up and running. So I've only got about 30 minutes or so, and there are some really big themes there about the global economy that we wanted to share to give an opportunity to look up from the really specific areas that you are all experts in, and to take a glimpse at the global economy and how we at the Economist Group see it today and see things unfolding. So bear with me as I go through some of these slides. I'm delighted to get into a bit of a conversation with you as we get towards the end of the session. So there you go, some key themes about the global economy and our key sort of outlook, our economic forecasts, thinking about issues around recession, inflation, and associated themes. We'll take a quick look more broadly at Asia and then focus in on India, particularly in terms of that changing, evolving, developing business environment and India's evolving role within the world. This, of course, is the year when India has the presidency of the G20, which is a fantastic opportunity to be on that global stage. And there's a lot more going around, particularly around geopolitics, that India is front and center in at the moment. But first, a little bit of context. And one of the great pleasures of working for the Economist group is I get to use all of these fantastic covers. If you recall, if you're subscribers, thank you very much. We publish every week, and a lot of thought goes into the Economist cover. And I generally use these to tell a little bit of a story. And I'm starting here on the left, looking at this free money. Let's take us back to the global financial crisis, 2007, 2008. And the response of central banks at that time was to cut interest rates pretty much around the world, but particularly in those big economies of the United States, of Europe, and so on. Interest rates went pretty much down to zero, in some cases, negative interest rates. And that stayed with us for a long time, right the way throughout the 2010s until we get to a point where we start to see some normalization of interest rates, of monetary policy in the United States, in Europe, in UK, and elsewhere. And then COVID comes along. But I just wanted to put that up there because it's an important issue to understand if we want to think about what's going on at the moment. Also in that period, if you look at traditional measures of globalization, the flow of goods, for example, of trade, of foreign direct investment, on all of those measures, globalization slowed down from the global financial crisis onwards, particularly thinking about trade and FDI. And the whole sort of basis for globalization, particularly the sort of infrastructure that supports it, free trade agreements and so on, all really up for questioning during that time. And this is something that we termed as globalization. Be ready for that. And then, of course, underpinning all of this is the climate issue, and quite a clever cover there for The Economist. You'll see the average temperatures for the global economy going up since that burst of economic activity from the Industrial Revolution onwards. And the climate issue has become front and center for business, for governments, for individuals around the world now. It's one of the top agenda issues and how we deal with that. Moving on, also in the last sort of 10 years or so, we've seen this increasing antagonism between the world's number one and the world's number two economy, between the United States, who's been underpinning that sort of globalization that we've known and grown with over the past few decades, and China, this huge emerging economy that has a very different idea of how the world can and should be run. That central cover there, talking about the New World Disorder. You're all familiar with sort of backlash against globalization, the protectionism, and we also saw a lot of nationalism coming out, think in particular of Make America Great Again, Donald Trump, and a lot of questioning of all of those assumptions that have underpinned the global economy for some time. And of course, the growth in influence of people like Xi Jinping in China and Mr. Putin in Russia as well, all presenting different ideas and models about how the global economy should move forward. What this means for business, business has been politicized. Business, trade in particular, has been weaponized. You could be thinking about tech. And one of the real key reasons between this antagonism between China and the United States is around tech and who controls tech. Semiconductors is one of the sort of front lines in all of this as well. You'll be familiar with that. And then, of course, this comes along. So this is the cover from March 2020, where we started to hear about this emerging illness that seemed to be emanating from Wuhan in China. A week or so later, given our globalized rules and the travel and all the rest of it, it's going global. And then a couple of weeks later, the global economy is essentially shut. And this is what we had to deal with throughout 2020 and 21. The huge sort of human cost of that, of course, in terms of deaths and people suffering from long COVID, but the economic impact was a huge shock to the global economy. And I mentioned before about that sort of slow normalization of interest rates. They were, of course, cut right down again to try to stimulate economic activity and recover. And so as we got into 2021 and 2022, the virus seems to be dropping down. We've got inoculations and economic activity is recovering and so on. but then we get some new problems to deal with, in particular, the sort of massive tangle of supply chains of container ships being in the wrong part of the world, huge spike in the cost of shipping stuff around the world, which was leading to some inflationary pressures and holding back or creating these big bottlenecks for growth as well. And then in March, just over a year ago, Mr. Putin decided to invade Ukraine, and this set off a whole chain reaction around inflationary pressures, particularly around energy, Europe being particularly hard hit. I'm from the UK. Energy prices in the UK just went through the roof, given how dependent that economy is on global markets. But we also saw massive food price inflation. All of that wheat that should have been harvested in Ukraine wasn't coming out, affecting things like instant noodles in Indonesia and so on. And we saw the monetary responses to this, and we saw in particular a massive spike in inflation. And inflation is something we haven't really had to worry about for many years, and particularly that period after the global financial crisis when interest rates were low. The big question was, where is the inflation? If money is essentially being pumped into the economy by government through quantitative easing, where's the inflationary pressures? It wasn't there. And we had that sort of golden period of governments, of companies being able to borrow very cheaply to invest in the economy, but with very little inflation. That has dramatically changed as a result of some of these issues. The pandemic, first of all, and the snarling of some supply chains, and then secondly, the war that we have in Eastern Europe. Concomitant to all of this, if you go back 20 years, 2001, we obviously had 9/11, but of longer lasting importance, China joined the WTO, and China's growth was turbocharged in those first 2 decades of the 21st century. And in fact, one of the reasons why we could come out of the global financial crisis relatively quickly with that type of V-shaped recovery in most places was because China was a massive engine of growth, double-digit growth in that economy, which is now, as I mentioned, the second largest economy in the world. China is slowing, it's maturing, its growth rate is going down and down. It's shot itself in the foot with its zero COVID policies over the past couple of years, and it's only just now, only in the last few months that China's started to open up, and we're starting to see that economy recover. But its glory days are in the past. They're in the rearview mirror. We're not going to see the type of growth rates that we saw 5, 10, 20 years ago. China's growth will moderate, and that's right. The economy is maturing and it's changing as well, but it has massive implications for the global economy. I'll come back to that when it comes to India a little bit later. And so we're in this sort of process now of what does the next stage of globalization look like? If we look back over the past few decades of all the advances of technology, of the free trade agreements and so on, what does the future of globalization look like? Who's shaping it? What's the role of the digital economy within all of this, and so on and so on. So a lot of sort of uncertainty and questioning of where we are with the global economy. So, one of the things that we do at The Economist is ask, well, what's next? And, so what? What does it mean for you? And how are we going to navigate all of this? So, the point of this session today is to provide some of that context and hopefully give you some questions to go away with and think about, well, what does it mean for us? How are we going to navigate all of this? Okay, so that's just by way of a bit of context to, here we are today at the end of March 2023. We've got, a lot of things going on in the world. So let's get into a bit of a sharper focus now, and I'll be drawing on the Economist Intelligence Unit's key sort of outlooks and forecasts for the global economy. So some key points to keep in mind, that the global economy is actually proving itself to be quite resilient. The mood music has changed somewhat from the end of last year, November, December, where we were forecasting recessions in places like Europe, in the United States, and in the UK, albeit quite shallow recessions, but anyway, recessions. We've now upgraded that growth outlook, which is pretty good. Inflation, that big story throughout 2022, seems to have peaked. It's starting to fall back. That monetary policy, that massive hiking of interest rates by the Fed in the United States, the fastest hiking of rates for 40 years. You need to go back to the 70s and late 70s and early 80s to see that. That's having an impact. Inflation seems to be peaking, although it's quite sticky. And, I'll come back to interest rates and monetary policy a bit later. People are spending that sort of revenge tourism, try to get a flight from Singapore to the UK. Forget it. Incredibly expensive. you need to fly by other places. Think about the massive return of tourism that's taking place in Japan, for example, as that country opened up in October. So, there's a lot of this spending, pent-up demand and spending by consumers, but also companies in terms of investing in their future. Geopolitics and protectionism, it underpins all of this, and I'll come on to the US's Inflation Reduction Act, the IRA, a little bit later on and what that means. But this is a sort of new form of protectionism. Come to our country, build here, and so it's made in America, and you'll get access to all of these subsidies and so on, which is really at odds with the global economy. Open up, you source from the best places, and so on. So, this type of new protectionism has some big implications for the global economy. And then finally, the return somewhat of China. As I mentioned, it's good to see China open up. It's good to see it return to growth, but it's not going to be the engine of the global economy that it was in previous years. Let me come on to this chart then. So the chief economist, good friend of mine for the EIU, is a bit of a data geek, and he likes to put these type of charts up. Let me just talk it through. This is the world. These are all the major economies within the world. And if you look at the top right, you'll see this sort of heat map. And this is GDP growth. So in 2022, GDP growth was about 2.6%. So that's in the middle there. If you go anything above that, so if you look at these economies like the Philippines, like here in India, Vietnam, Bangladesh, and so on, you see a red, you see oranges. These are economies that are hotter, that are growing at faster than that global average. But if you look at many of the other economies around the world, they might be growing at or just below that average rate. And where you see the blues, these are economies that are in the deep freeze, and no surprise there, that's Ukraine and Russia. So that was how last year looked. And at the end of last year, the outlook for 2023 was not particularly bright. And if you also look at the sort of headline there, at the beginning, so this time last year, or maybe sort of January, February of last year, we were forecasting that economies were going to be bouncing back from COVID, have all of this opening up, and we thought that the global economy would grow at about 3.9%. We were on sort of track for that until Mr. Putin invaded Ukraine, and you saw the economic impact of that. I mentioned inflation, interest rates, and energy and food costs, and so on. So that's where we were last year, and this is where we are this year. Immediately striking is all the blue that you can see there. The global economy is slowing this year. However, we do think that we avoid recession. I'll come back to that. There's always some risks and downside and upside risks and so on. But we have upgraded our forecast. So just 3 months ago, we were forecasting that global growth of about 1.5%. We now think that that's going to pick up to about 1.9%. And I won't go through all this sort of all the detail that we got here. I'll be able to share this deck with you so you can have a look at it. And please do go to eiu.com where you can see all of this sort of data and analysis as well. But we are in a softer period. And of course, this has impact on things like investment, on things like spend. You would have seen all the sort of job losses, particularly in big tech, as companies hold on to their advertising spend because they're not quite sure what's happening. And that has a knock-on effect throughout the economy and so on. So, pretty mediocre. And if you think about sort of past performance, just under 2% growth to the global economy is pretty disappointing. We should be achieving much more than that. And of course, some economies and some regions will be doing that. Asia, as we'll come on to in a bit more detail later, you can see a lot more of the oranges and reds in there, not least here within India. Okay, so that's our outlook until, this is the cover just from last week, thinking about, oh no, are we going to face another sort of hit to the global economy? Is this another global financial crisis that's about to emerge? Good news is we think not, that we think that this is pretty contained, but there are some downside risks to all of that. And I'll come back to that in a bit more detail later on. If you look into what's been going on with Silicon Valley Bank, which sort of kicked all of this off, they took a wrong bet on where interest rates were going. They thought interest rates were going to stay lower for longer. They got it wrong, and they got burned. If you look at Credit Suisse, they've been having a lot of problems, not just recently, but over the last couple of years or so, and that sort of has been picked up by the Swiss government and UBS as well. So we think that this is contained, but there might be these sort of flashpoints or fires that break out continuing from the issues that we've got there, which again go back to that sort of dramatic change in monetary policy and interest rates. So we'll come back to that. Okay, so this is a slide that I wanted to show here about why we think Asia in particular is somewhat insulated from these Western bank issues that we have in the United States and in Europe as well. Places like Australia and New Zealand, you see here, sort of particularly on this side as share of GDP, are somewhat overexposed to foreign capital coming in to the banks, but everybody else within this region we think is fine. And so we don't think that there's a particular contagion risk for Asia at the moment. However, if it does mean that we have, and we do have a lot of uncertainty about monetary policy, we saw a hike in the US last week and in the European Union as well, but has that plateaued? Do they need to reconsider the monetary policy strategy in the wake of some weakness and fragility in the financial sector? We do think that tightening or continued tightening of liquidity might have some downside risk to economic growth. Why? Well, because Asia still exports, a lot to places like North America and Europe, and if the demand there is going to slow down, that will naturally have a negative impact here. Let's move on, and this is sort of another way of looking at global growth. And what we have here in the dark blue bars there are 2002, and in the light blue bars we've got 2003. So you can see the faster growing economies up at the top there. You'll see India last year grew at just under 7%. We're forecasting, in fact, we've updated that a little bit. So 5.5%, just under 6% growth, we think, for India this year. But if you come right down to the bottom here, Russia, UK, prefer not to talk about the UK and all of the sort of nonsense that's been going on there for the past few weeks, but you see how policy really impacts on economic activity. Argentina, Germany, having mild, very mild recessions, or maybe technically avoiding recession, but growth will be anemic in those economies. And then in this box here with the orange line, these are economies that will be posting some growth this year, but considerably down on the year ahead. So pretty much sort of treading water, stagnation. The growth is all up here, and a lot of that you'll notice in Asia and places like South America as well. Okay. Energy prices has been a major issue around the world, and just look at the sort of spike in energy prices. Some of that, of course, from 2020 onwards, was around that returning demand to the global economy. So, energy prices are going up. But then, of course, if you get into early 22, I mean, look at that blue line for natural gas. Just goes through the roof. A particular impact in Western Europe. And we've had really quite dramatic policy responses to all of that. In Germany, we've had the sort of destruction of demand as factories will be shutting down for good and moving out. They've been sort of addicted to cheap energy coming through Nord Stream pipes, and that's all over. The UK, I mentioned earlier on, particularly housing, energy prices have gone through the roof. We think that that's peaked. There's some better news. The winter was not as cold as it was forecast to be. European Union has managed to stock itself up quite well. So we do expect to see those energy prices coming down. Okay, and I'll move on from that one. And then coming back to inflation. Inflation has, we think, peaked in many economies. Those hikes in interest rates will start to bite, although there's always, a considerable lag between hiking the interest rate one day and seeing the impact in the real economy months, if not years later as well. So it's not as finely tuned as people might think. We do think, though, that consumer prices have spiked and will continue to come down throughout 2023. You can see these quite dramatic rates in interest rate hikes there, and that has a real impact on demand around the world. Although as an outlier, look at Japan. Japan's had pretty much zero interest rates, and sometimes negative interest rates for decades now. And the big problem with Japan is its population is shrinking. Demand is very anemic. And even with monetary policy at zero and sort of money being pumped into the economy, demand is not there. Of course, that's a very different story to places like India and elsewhere around the world. But this is the type of environment that we're in. Okay. and then just thinking very quickly about what monetary policy means for currency and forex and so on. The big story last year was that massive hiking of interest rates in the States led to a strengthening of the US dollar. And generally when that happens, those countries that borrow in US dollars, and particularly thinking about emerging economies, that can lead to a financial crisis there where there's a crunch in liquidity, or servicing of debt becomes very expensive. That was fairly limited. Reserves, particularly thinking about emerging economies in Asia, financial reserves, forex reserves are much more buoyant. There's a lot of sort of currency swap arrangements and go on, and interest rates were hiked in the region rather than being kept artificially low to stimulate demand. So actually, I think Asia has come out of that quite well. We do think that as interest rates peak in the United States and start to fall off in the second half of this year, that the US dollar will start to weaken somewhat against many economies, although it will still remain quite strong this year. The European Central Bank is still on a hiking route. It hiked by 50 basis points a week or so ago, and that will support the euro. In other words, the euro will remain strong. Again, I don't want to talk about sterling, and that's all over the place, very weak, and will continue to be so. And then places like China, the RMB, we expect to see some strengthening of that currency as the economy opens up and economic growth returns there. Although, again, that might peak somewhat in the second half of the year. And we do expect the rupee in India to strengthen somewhat against the US dollar, particularly by the end of the year as well. And that's based on positive stories of in domestic demand and of exports as well. Okay, let's move on. I think I'm just going to skip that one, but because this was just talking about those economies where people have borrowed a lot of money, and because interest rates are higher, the cost of servicing that is going to be a bit more, and that might have a negative impact on demand in some economies. You can look over here in Thailand and Malaysia. That light blue there is the share of household borrowing, and that's getting more expensive as interest rates remain high. So that might dampen some demand there. But anyway, let's move on from that, and I think we'll just move on to that. Okay, so given that we've got about 10 minutes left, we'll focus a little bit more on the region here within Asia. And I wanted to take you through a couple of ways in which we look at the region. One, of course, is around GDP growth, and even though that's a measure that could be improved, it's still one of the sort of standard measures to see how economies are going. And what you'll see here, the blue line is for 2023, and the red line is for 2022. And so pretty much across the board, you see economies slowing down. It's what we saw on that heat map earlier on for the global economy. It's what we see within Asia as well. A couple of exceptions to that. You'll see Hong Kong, which had a really miserable sort of period around COVID, doing much better. And China, now that it's got rid of those zero COVID policies, will be returning to growth. But pretty much everybody else, that global story is being played out here regionally as well in terms of slower growth in 2023. Our forecasts go out for 5 years. We do expect things to be picking up second half of this year and into 2024, all things being equal, unless there is a really sort of blow up in the global financial crisis, which we're not forecasting. But this is what we see for this year. And you can be talking about some of those longer term fundamentals that we see within the region, and great disparity there. I mentioned Japan, an aging and shrinking population, where the population pyramid is basically inverted. You have a lot of people who are living very long, which is great, but you have a smaller number of people working and paying taxes to support all of that. And at the other end, we have very young, growing, dynamic populations, places like India and Indonesia, for example, where the challenge is creating enough jobs for all of those new people coming in. Okay. Consumer spending is something I picked up a little bit earlier on, and I think this is an interesting one to look at. So again, we've got 2 years, 2022 and 2023. And so this is last year, and a lot of consumer spending, so this is the blue here, private consumption, driving economic growth. If you compare that with somewhere like China next door, I mean, last year was negative. People couldn't go out. They were locked in their homes and so on. But we are seeing a big return to that for this year, or forecasting that, whereas we see that decreasing somewhat there. Picking some of the slack up will be government consumption, so accelerated spending on things like infrastructure And that's great. That's long-term investment in the economy as well. So, as you look around the region, as you look at different economies, and as you break down their growth into, who's spending and why, you get a better sense of where demand is going to be. Okay, let's move on. So to focus in on, as I mentioned, the world's second largest economy, it's had a pretty rough couple of years. We've just had the sort of 2 sessions in Beijing, which sets economic policy and so on for the years ahead. They've set themselves a very easy growth target. In the past, it was quite aspirational, that the economy wanted to grow at 7 or 8% or whatever. And now I think we're forecasting, 5.7% for this year, which is an upgrade from last year. But that will then continue to moderate. And if you look over the years here, so this is 2023, 5.7, but we do see that continued sort of slowing, maturing of that economy. And of course, you'll be thinking about India and the growth rates we'll see here, well above what we're seeing in China. So that relationship has flipped somewhat. So this year, certainly, positive for China, positive for the region, and positive for the global economy. But the impact of this opening and of China's economic growth is much more muted than it would have been 10, 15, 20 years ago. India then, a couple of things I wanted to sort of focus in on when we're thinking about the economy here. First of all, thinking about the business environment. Now, we have our own sort of structure and system for rating a country's business environment, and I'll show you what that looks like for India in a second. It's basically looking at openness to foreign direct investment, investment in infrastructure, and so on, all these different measures. And one of the things that we're seeing in here within the region is a continued improvement. So the red here is the past sort of 4 years, 2018, 2022, and the blue is what we're forecasting. So we look at all the policy, we look at government investment, we look at policies towards foreign exchange, whatever it might be, and then we make a call on whether that's going to improve the business environment or not. And you can see pretty much across the board, Singapore is always a very good business environment, although it's very expensive and becoming more so as a lot of Chinese capital flows into Singapore. Anyway, for most of the region there, we're pretty much clustered around this sort of 6 or just over 6 score, which means that India is becoming more of a competitor with other economies in Southeast Asia in the way that it wasn't some years ago. I'll come back to that in a moment. And then if you think about improvements in India versus China, again, we've got some different time frames here, 18 to 22, what we think for the year ahead, and then that's China for the years ahead as well. You can see that on many measures here, so this dark blue line, India is going to be improving vis-a-vis China. This one here is a little bit different, infrastructure, so China spends a massive amount of infrastructure, and the infrastructure is pretty good quality there as well. But across the board, the story that I'm trying to sort of build here is that India's business environment is really quite rapidly improving, just at the point when people, particularly United States and other economies, want to get out of China, just at the point when India is becoming cost competitive with other places in Southeast Asia as well. And at that point, right now, India is also has the presidency of the G20. So this is one of the reasons why I had that subtitle there, India's time to shine. Continued digital transformation of the economy will be a central theme of the presidency. There are some challenges, and we know about the sort of geopolitical framework, particularly vis-a-vis Russia. It's interesting to note that on security-related issues, that India is getting much more closely aligned with Japan, United States, Australia, and so on, looking at the Indo-Pacific. We know that Prime Minister Modi and the late Prime Minister Abe were very close friends and shared a sort of common vision about that Indo-Pacific as well. But if we look over the Himalayas and go into Russia, we see a different relationship there, much more pragmatic. But it's something that India is able to do because of its positioning, because of the strength of its economy. But that will mean that, and we've already seen some of this in some of the earlier meetings around the G20 as well, it will be very politically charged as we get through the year. But beyond all of that, we've got things like the B20, the business grouping that will be meeting before the G20 itself. This is a great opportunity for India to be promoting itself, Indian tech, Indian businesses and services and so on, and for India to really map out that more important role on the global stage as well. This is the business environment that I was talking about, and these are all the sort of different measures here. We go from 0, which is awful, to 10, which is the best possible. So, if you break all of these down, it's like political environment, taxes, or whatever, there's a lot of sub-indicators in there, and that spits out a score for us. So just to highlight a couple of things here, infrastructure spend, these policies that we've got really accelerating and really pushing India's score up in the business rankings. That's a great positive. Things like some of the bilateral free trade agreement negotiations that we will see get signed, that's going to improve the business environment as well, openness to competition, and so on. Although India is a little bit of a laggard when it comes to the big multi-regional free trade agreements, and not even thinking about the WTO, which hasn't really progressed its agenda for many, many years now. And at The Economist, we think openness and competition are great things, and one of the ways to do that is to get more closely involved in regional free trade agreements that everybody agrees to reduce their barriers to entry and so on. It stimulates competition. So that's one area that we can see. The rollout of 5G is accelerating and so on, but you'll see some other areas, maybe in here, for example, policy towards private enterprise and competition, where there could be some further improvement. But on the whole, we see a very positive movement or improvement in the business environment there. Focus in on a couple of other things. We mentioned there about India's young, dynamic population, which is fantastic, but putting this in context, China's working age population is decreasing. China is aging, and I mentioned Japan as an aging and shrinking population. Japan's rich. It can afford to do that. China is not yet rich. It's the world's second largest economy, but on a per capita basis, it's going to have a massive problem with an elderly population, and how are they going to fund that? Healthcare, pensions, and so on. India is at the other end of the scale. I mentioned Indonesia as well. The challenge there is creating opportunities for all those young people and making sure that they're educated, that they have the skills required of the emerging global economy that we're all working in. We do a lot of work. We did a big study with Cognizant recently, looking at the sort of future preparedness of the organization, and particularly focusing in on things like skills, the type of skills that are baseline for people coming into the market, and then the more advanced digital skills and green skills that companies are going to need. So, that's something that needs closer attention as well, and not just at the government level, at the company level. How do you find the right people? How do you support, train, and develop them so they have the skills in order to deliver on that growth story? And getting very close to time. In fact, time is up, it's telling me, so I'll just skip over this, talking about a big increase in foreign direct investment coming into into India. A lot of that might have previously gone to China or elsewhere in Southeast Asia. That's great. And if you break it down, you can see that services, computer hardware, construction, this is where the money's coming in. That's great, linking India more closely into the global economy. And I mentioned this one. This is the big Inflation Reduction Act in America. And let's not forget some of the figures, the spending within all of this, and particularly around transportation and power. This is transforming the economy, away from internal combustion engines to electric vehicles, for example, re-engineering the grid within America. There are some massive opportunities, and these subsidies that America is rolling out will suck in investment from overseas. There's obviously massive opportunity to get involved with that. I think just finishing off, they're talking about the sort of this post-pandemic tech acceleration, this massive investment in or accelerating the digitization of businesses. That continues. And some of the big players here within India, of course, really riding that wave and surfing that wave, and will continue to do so. But of course, that will suck a lot of other people in as well. So, we see this around the world. It doesn't really matter whether you're in Singapore or in Germany. The acceleration of the digitization of businesses, the creation of more digital-first businesses, government spending more on digital health, for example, payment systems, e-commerce, whatever it might be. This is a massive wind, filling the sails of the tech sector here. So that's just going back to GDP, look at how things could change, and this is looking at 2020 and looking where we might be on a longer term forecast in 2050, and look how some of this changes here. India moving up from the 5th largest economy up to the 3rd largest economy, other winners and losers, Japan, currently the world's 3rd largest, going down that ranking. So some big fundamental changes going on in the global economy in terms of where growth is, in terms of geopolitics, in terms of sort of near-term concerns over recession and interest rates and inflation and all the rest of it. A very difficult environment to navigate, which is why the best way to do that is to have a very questioning mind. And I think the final question that I would pose to all of you is, you should be asking, so what? What does this mean for me? What does it mean for my business, for our sector, and how can we be positioning for all of that? Okay, so I am well over time, and apologies to the organisers for that, but hopefully that's provided a little bit of context about what's going on in the global economy and what it might mean for you. Thank you.
Thank you, and what a fascinating presentation. I think it left a lot of questions, like you rightly said, on how do you look at the future. But I think it was also reassuring that maybe there is a mild recession or a stagnation ahead, but it's not gloom and doom as we were thinking at the start of the year. So thank you so much, Andy. That was very great. I'll start with the first question, and then I know we're out of time, but we'll request if the audience has any questions to raise their hand so that the mics can come to you. The tech industry in India is very focused on the Western markets, and you did show the GDP numbers for some of the key markets in the stagnation range. I wanted to understand if there are any sectoral trends that you see, maybe, what are you seeing, different verticals? Is there a different trend on how auto will spend versus manufacturing versus financial services versus retail? Because I think all of those will have implications for our members also.
So just a very quick couple of thoughts there. The whole energy crisis that we've seen in Europe will accelerate the transition, the green transition that we see there. We already see that in policies. We already see the growing impact of things like wind farms, particularly offshore wind farms in the UK. We're seeing a lot of investment going into new energy generation and transmission to power things like the transition of the automotive sector. So new battery plants being planned and built in places like Spain, in the UK, and elsewhere. So that's that energy and transportation nexus, is pretty red hot. There's a lot going on there. Just thinking about Europe, I'm not even touching on the United States there. Places like Germany is very interesting. They have a lot of manufacturing industry. China has been a major market for them, not least in the auto sector, but also in terms of machinery to go into the manufacturing process. Germany is also having to restructure its economy, and particularly around energy as well. I mentioned some of the manufacturing will be shut down and will disappear. So that's something to keep in mind. But it will also mean that this will accelerate the digitization of businesses and services. And think about that broadly. It's not just the massive boom in e-commerce that we saw throughout the pandemic, which is pretty much here to stay. It's education, it's healthcare, it's financial services and research and so on. And that's not even getting towards things like the application of AI. And with the launch of ChatGPT, ChatGPT-4 recently, this is quite revolutionary technology. There's a very, very good podcast from colleagues in The Economist itself talking about this just last week, about the promise and the concerns around AI. We as a business are looking at how we can apply AI to certain parts of roles, of functions and so on. So early days, but combining all of this and thinking about all of those businesses that will be AI first, not just digital first, but built around AI platforms. That's really quite stimulating.
That's phenomenal. Questions from the audience, or I think there's a question there.
Right. This question is about the India is signing a lot of FTA with UK, EU, already Australia they have signed. How this will impact the IT and the offshore services?
if I heard the question right, it was think about the UK and changes there that will affect the...
No, the free trade agreement India is signing with UK and European Union. It has already signed with Australia. So how this is going to impact IT and offshore services?
Okay, I think you're probably going to be in a better position to answer that yourself and see where the opportunities are. But in terms of, if I understood the question right, the closer relationships around free trade.
India signs all these foreign trade agreements with different markets. What is the opportunity for technology services as a result of that? Maybe I can answer part of that question, right? If you just see Australia, India signed the foreign trade agreement with Australia, and the taxation issues that we were dealing with have been addressed. There's also opening up of markets on both sides that happens for industries. So clearly, today the government of India is positioning technology as a key soft power in all of these FTAs that will get signed. So clearly, any FTAs will create, one, address ease of business issues on both sides, plus open up new business opportunities.
I think the only thing to add to that is that we do see increasingly digital trade included in free trade agreements and economic partnerships. The relationship between Singapore and Australia, I think, it sets a sort of bit of a benchmark there. And places like the European Union, the UK are very, very keen to bring digital trade into those existing relationships and future relationships as well. Raises issues around data sovereignty and so on. Last week in Singapore, we had our Tech for Change event, and one of the keynote interviews I had there was with the Minister for Telecommunications, and he's been right at the heart of the digital strategy within Singapore. Data sovereignty is a key issue. Think about TikTok at the moment in the United States, in Europe and so on. Singapore sees itself as becoming a sort of data hub, but these are some of the really sort of challenging issues around the digital economy and the movement of data that need to be addressed at the intergovernmental level.
An interesting point we are now seeing is about, like you mentioned, right? Technology and geopolitics is getting very intertwined. And you talked about globalization, you talked about New World Disorder, we've talked about the impact AI can have for different countries. How do you see all of this playing out in this whole, whatever different version of globalization that lies ahead?
It's one of the fundamental challenges. So again, going back to the relationship between the States and China, which 20 years ago, the United States was lobbying for China to join the WTO. And the thinking there was, bring this big economy, or this small economy then, but will grow, into the global system, that economic growth will, stimulate more sort of democracy and openness and liberalism. Of course, that didn't work. Xi Jinping has taken a very, very different route there. And as that's become increasingly clear over the years, then the focus has come on to technology, and particularly around semiconductors, but then it's wrapped up with machinery, it's wrapped up with social media, and so on. A lot of the thinking around China and the US, you hear the word decoupling a lot, and very often in the same context of deglobalization, as companies come out of China, not just China, but around the world. And because of security concerns or the impact of COVID and so on, we hear a lot about reshoring and friendshoring and nearshoring of supply chains and so on, and particularly in tech sectors. Many Chinese firms are sanctioned by the United States. So working out what you can do and where, and what jurisdiction you're in, these are big challenges. And these are also costs for business as well. And if you follow that deglobalization, further and further, you see the emergence of, people talk about the splinter net, for example. We already have that to some degree. China has its, the Great Firewall of China, which, and people like major players like Facebook, Meta, or Google can't operate within China. But increasingly, Chinese firms in the United States who might be bringing great technology and see opportunities there are going to be frozen out of that. There are winners and losers, of course. When we saw the trade war hot up in physical goods between the United States and China, we see an outflow or an acceleration of the China plus one strategy. So you're in China for China, making and producing and selling there. But the stuff that goes into global supply chains moves down to places like Vietnam, Malaysia, Thailand, Bangladesh. They've been great winners within all of this. And now I think the opportunity is there for for India. And we see the closer links between the two governments, particularly around tech. We see the improvement of the business environment. We see the increase in foreign direct investment. This, I think, all bodes well for India.
Any other questions? We'll just take one last question. So if anyone else has a question, just raise your hand. We'll get the mic to you.
Yeah, hi. On the data points that you showed on the comparison between India and China, the macroeconomic outlook wasn't very healthy for India. How do you see that impacting the inflow of global brands into India? Second part, of the other matrices, you also showed besides infrastructure, everywhere else, India is accelerating better than China. How is the investment in infrastructure in India adequate? And if not, how do you see that hindering us keeping in pace or maintaining that lead with China?
Okay, so if I break those two questions down, there's the big sort of macroeconomic picture, India and China, and the second one was a focus on infrastructure. So look, it's certainly the case, I think, as I mentioned, that China's big growth days are behind it, that it's a maturing economy, and that's something to celebrate. 20, 30 years ago, companies were going there to make, sports shoes and stitching T-shirts together and so on. Labor costs have gone up dramatically there. The economy is much more sophisticated, and it doesn't need that type of investment. In fact, China is desperate to get high-tech investment into its economy. So it's shifted the economic structure has changed and policy has changed as well, and that's flowed out to places like Bangladesh and Vietnam and Indonesia and so on. So that's something positive there. But and let's not forget that the world's second largest economy growing at the sort of 4 or 5% over the next few years, that's pretty good news. But it's not the 8, 9% of 10 years ago. So, China is not going to be that engine of growth that it was. So coming on to India, India's growth trajectory is going to be quite different. China was all about manufacturing, right the way from labor-intensive to heavy industry, steel. I mean, just remember a few years ago the massive investment in steel that China was making, causing global gluts of steel and knocking out producers around the world and in other sectors as well, cement and whatever, sucking in all those commodities that made Australia very, very rich. India's growth is going to be quite different. Services play a much bigger role within the economic structure here than they did in China. And in fact, this is a positive thing. People talk about leapfrogging and so on. The more services you have in your economy, you're talking about more higher value added, more knowledge intensive industries as well, which is great because the margin on digital work is much bigger than a ton of steel or whatever it might be. So getting that balance right is important. But I think the fundamental thing about the growth trajectories of these two economies is that India will continue to grow and accelerate, will be growing above China, but its growth trajectory and the nature of that growth will be quite distinct. And so that creates new opportunities and different sets of challenges as well. And just to focus in on human capital, China need a lot of people to go and work in factories, to bolt things together and whatever. India will need people who have all of those digital skills and can operate in those environments. And the second thing in infrastructure spending was one of the sort of injections of capital that the Chinese government put into the economy to help it grow. And on the back of that, think about the massive ports in Shanghai, for example, the high-speed rail links and so on. They in themselves were economic stimulus measures to get that economy going. There was certainly overspend in infrastructure, and you can think about, even in private residential apartments and so on, the ghost towns that were built and then were not sold and now need to be smashed down. The over-investment in roads, and we've seen this before in places like Japan as well. So India, again, has the opportunity to be very smart about its infrastructure spend. What do we need for the type of economy and industrial structure that we think is going to emerge over the next 10, 20, 30 years? Where do we need to best put our money into the infrastructure. And key things would be around energy and having that grid and smart transportation systems and so on, maybe over and above the different type of infrastructure spend that you need for an economy that's going to be based around big, heavy industry and so on. And these are, subtle, and this is where policy comes in. This is where industry comes in talking to government to say, these are the bottlenecks we're facing, and this is this is how the targeted spend will help us in these areas.
Do we have any other questions? If not, Andy, thank you so much. Maybe I'll just end with the last question on saying, what fascinates you the most about the job that you do?
The diversity, trying to make sense of what's going on in the world and trying to fly at that sort of 40,000 feet level so you get a picture of what's going on and what might be coming up over the horizon, but then being able to sort of come right down and, okay, what does it mean for you? What does it mean for your business or this sector? It's incredibly challenging, but I do find, keeping an eye, and just a quick plug, I don't get a commission, but do sign up for The Economist. It's a great way to keep abreast of what's going on in the world. It's a weekly publication, so it doesn't have that sort of 24-hour news cycle mindset. It's more considered and goes into deeper detail. That's one of the best ways that I get updated, but by talking to people like you and the people in this room to find out actually how all of this is touching down in certain sectors, in certain countries. That's what I find fascinating.
Thank you so much. Thank you for being a great audience and having a very engaging conversation.
Thank you.
Well, many thanks for breaking down those concepts and walking us through your perspectives in a lucid and pragmatic manner. I now request Ms. Sangeeta to share a memento with Dr. Andrew. Also one for our fantastic moderator. We shall now break for a 10 minutes tea and networking break. Snacks are being served in the hall towards the right, and request everybody to please be back in 10 minutes for the GTM playbook discussion. You can also grab your snacks and coffee here for a coffee table conversation. See you on the other side of the break.